We are going live on the computer. Happy Monday, team. Happy Father's Day. Hope all the fathers out there had a great weekend. Going live on Smarter San Diego today for the Facebook side of things. Always go on YouTube and premiere immediately thereafter. We actually have a lot more live viewers on YouTube, which is interesting. Today, I'm going to show you a couple things that are going on in the market. I am going to share this real quick to my newsfeed. And get that done out of the way. All right. So, not a white t-shirt guy. I feel like I have a pack of cigarettes like rolled up in here. But I've got a white t-shirt on today. So it is what it is. We're going to keep it clean. It's heavenly. Ah, here you go. I got more than that for you. This is better than a high school production, but close. Really close. Maybe not quite as good. Derrick Evans, VA Home Loan Specialist, NMLS 155010. Going to share some stuff with you today. Stock market rallies, 401k looking good, looking fresh. Not great for mortgage rates, but there's a silver lining. So I'm going to show that to you right now. Let's dive in. And I got a couple of articles. I got a few things to share with you here. Crazy stuff. But let's go through our normal routine here first. Now, I do want to look at this chart. I want to show you a few things about this chart. So, Wednesday was brutal. It was horrible. This was Wednesday. Bonds got crushed when the Fed spoke. But look, the following day, we made a lot of it back. And I want to point out something here. Look at all the wicks at the bottom of these candles. This is very good. The longer the wick, the better. This shows that there's a big buyer. Now, between you and me, that big buyer is the Fed. It's not the market coming in going, yeah, let's get those bonds at 2%. That's not what's happening. But that said, doesn't matter. Let's look at the price action. Let's see what's going on. I like the fact that we're trending higher here, even though today we're down almost 20 basis points. I like the fact that, we're establishing a trend here that could move us higher. I like that. I like the way that looks. I like the fact that we've bounced off these two support lines here, which is nice and heavy support with a lot of buying action. Whoever it is that's buying it, we don't know, but that's good. So today, maybe rates got a little bit worse, but that's also okay because the last couple of days have gotten better. And ultimately, if we're right here at 103, that's a pretty good split, from that really bad day that we just dealt with. So we're like right at that 50% Fibonacci retracement. And it looks like since we broke through it to the upside, we're coming back to it on the downside that we could bounce off of that. So that's the good news. As far as mortgage bonds, remember, we want mortgage bonds to go higher because that will mean lower mortgage rates. Today, I'm calling it a lock day. I would lock probably right here if you're purchasing and try to float down. If you're refinancing, you've got more time on your side, then you can kind of hang out here and see, because are we going to make a run up here? Because there's resistance a long ways away from here. I mean, you've got another, 50 basis points higher that we could go before you really hit any resistance. So there's some upside to waiting if you have the time on your hands. Now, if you're purchasing, you go ahead and lock because you could float down if you really get a move that's going to make a big difference. So that would be my recommendation as of today. Let's take a look at the markets. So I don't know last time I refreshed this, and it's not very good at auto refreshing. So let's check it out here. We closed up almost 600 points in the Dow, up 0.7%. Let's take a look at oil. Oil's doing great. I expect that trend to continue. Our target for oil is around $100. I'm not going to start selling anything until 90 or so. I'll start shaving off there. Gold was up today, wasn't it? Yeah, gold's up a little for gold. Silver, copper, platinum, palladium. Everybody had a nice day. Palladium up 4%. How about that? And then the crypto markets got mashed today pretty good. Bitcoin down in the low 30s again. And so forth and so on. So bad day for crypto, good day for stocks. This is exactly what they want. It's what they're hoping for. Few things to pay attention to here. For Bitcoin, since the 2-week low is China intensifies crypto mining crackdown. So what's happening with the mining crackdown isn't that that's bad for Bitcoin, but what it means is that the miners, if you're a miner in China, miners make money by selling the coin, right? They mine the coin and then they sell the coin. And that's how they get their money. So if you have to get out of Dodge, if you have to fold up shop and go somewhere, you have to sell all your coin. So all those miners who have to get out of China have to sell all their coins. It's a great, in my opinion, a great buying opportunity. I thought this was really interesting. We've been covering that. I've covered this in my radio show for a decade. We talked about this. And Supreme Court rules against NCAA in compensation battle with college athletes. Should college athletes be paid? Pretty much the ruling here just says that they can be paid through scholarships. Still, this isn't like a, hey, you can actually make money situation yet, but they believe this is going to go to Congress and they're going to be working on rule changes for this. So how crazy is that? Isn't that wild? This is the real shocker, though. And this is what I want to share with you, because this is, for me, this is the greatest fear. This is my biggest concern, especially for San Diego County, really Southern California, but especially San Diego County. I called this like 10 years ago. I said, San Diego is going to be the next San Francisco. It is. And when you knew what the market was like 10 years ago in San Francisco, that is what, or 15 years ago even, that is what is headed to San Diego. What's really interesting, though, is that they're trying to push this agenda worldwide. This is an opinion piece, so I'm going to break this down for you. Now, I've been telling you a lot about media lately, and I'm going to continue to expose it because there is a ton of media that is bought and paid for that people believe is actually editorial content. In fact, almost all media is paid for by an agenda. All of it. There's some sort of agenda. Imagine you're a massive advertiser on, Fox News. You're going to have some say. You're writing them a huge check every month. You're going to have some say in what gets aired, right? Or what doesn't. You're going to have some influence. And I'm just talking about Fox News, all of them, CNN, MSNBC, all of them. And so whoever is financially supporting these media entities has a say in the content that goes out on those media entities. Also, notice this. So this is a Bloomberg opinion. Notice that opinion. Bloomberg, very same thing as CNBC. That's why we follow CNBC. We know the agenda. We know who owns them. We can take that information, couple it with what's being presented, and know the whole picture. It's like keep your friends close, your enemies closer kind of situation. This article was shocking to me. This was last week. I didn't get a chance to talk about it. America should become a nation of renters. This article goes to, and I'll post the link. It goes on to talk about how basically, the idea of buying a home was a good idea when homes were cheaper. It made sense for people who were middle class families to buy houses instead of renting because they could grow some wealth with it. But now, it's just out of their league and they really should just be renters, and we should really figure out how to build rental communities or whatever to help with this growing need. And this, so the reason why the opinion piece is important is because that just tells you right there it's bought and paid for. I mean, someone paid for this to be written. There's no question about it. They're not just giving Carl Smith the free reins. Hey, Carl, write an opinion piece for us, Carl. No. They're saying, Carl, we need to write an opinion piece. We have someone who's going to pay us $10,000 to write this article or whatever it is. We want you to do it. It needs to be something about how America should become a nation of renters. Can you make that happen? And this is how it works. So this also, I thought it was interesting. Like it's 3:30 a.m. So they released this thing very early in the morning. That's 6:30 East Coast. And this was obviously, this Bloomberg, which is a worldwide thing. But it was like first thing in the morning for Americans. Here you go. And so this article embodies everything that I'm afraid of. What they're trying to do is they're trying to keep regular people in America from owning homes because Wall Street wants to buy them all so they can rent to you. Why do they want to do that? Because there's control involved. And the more you can control the market, the more you can dictate where it goes. They're having a hard time with controlling. It's harder for them to control the stock market, right? Because pretty much can only go one direction right now, which is higher because of what the Fed manipulation is. So you don't see as much back and forth. The back and forth that's controlled by Wall Street is how they make money, the ups and downs. When you look at the reality behind crypto, crypto is being manipulated. There's no question about it, but it's more difficult to manipulate. And there is going to become a point of no return with it. When it gets to a point where it can't be manipulated as easily, and almost maybe not even can't be manipulated at all. So Wall Street likes the idea of markets that they can control. They don't want you to own a home. They want to own the homes so they can rent it to you. And this is just another example of that. So I look at these things and try to figure out, well, what's the real thing that people should do? And it's tough because in this market right now, we have a lot of buyers who are exiting stage left. A lot of buyers who've been trying to get into a house for a month, 2, 3, and they're just saying, you know what, I guess we'll just have to find a different time to try to buy. Can't get into a home. And every time we find one we really like, somebody with cash, quick close, etc., and we just can't compete. So buyers are exiting on a regular basis. They're exiting this market, maybe for good, but certainly for a while. Maybe for a year, maybe 6 months. They'll go sign a short lease. It just gets more difficult at that point when you've invested in a move and so forth. And a lot of what's going on, we saw this, I showed you some of the different data last week too, about cash buyers. There being so many cash buyers. Where are these cash buyers coming from? A lot of it's pension funds, hedge funds, Zillow's buying homes, Redfin's buying homes. Everyone who has cash and needs to move it around is pretty much buying homes right now. And that's one of the things that's causing a problem, because it's a great investment to buy real estate and own it long term. Everybody knows that. So I think what a lot of these big funds are doing is they're saying, hey, listen, we can buy this real estate. There's a chance the market will continue to go higher. We can flip it for huge profits, make the bottom line look really good. Or we can keep it long term and have a cash cow. Either way, we can't lose. If the values go down, we can rent them. I really think that's what's happening. And even though the stock market's up today, it's up nicely today. Ultimately, if we go and look at the chart for the Dow, and we'll just pull this up. Oh, it's going to automatically give us a 1 year. Let's look at a 6 month. In a 6 month, it's up not bad. Up from let's say call it 30,000. So let's call it 10% in the last 6 months. But here's where it starts to get dicey. Start zooming in a little bit. Oh, not a whole lot left in the tank, it looks like here. We have a double top happening here. We just kind of have sort of weak sideways action. I mean, look at this. Weakness. And so what's happening? Is big money rotating out of stocks? Was this a suckers rally today? Was it a short cover rally? I don't know. All I know is real estate is where the big boys are going. And they're scaring away the average home buyer. And I think that's a shame. So more to come on this. But let me give you this for now. If you're not sure what to do or where to begin with the process of acquiring real estate, buying a home, give me a call, shoot me a text, shoot me an email. Let's talk about it. It's okay if you don't buy today. That's okay. But it's got to be on your roadmap somewhere. At some point, you got to own real estate. You definitely need to own your primary residence. That's for sure. If you can buy investment properties, terrific. If you can get to that point where you're a real estate investor, terrific. But you got to own your primary residence. Do this now. Thank me later. I'll help you create a roadmap. If it's a year from now, 2 years from now, we'll play that game out. We'll set you up. But you got to have a plan to own real estate. The numbers don't lie. People who own their homes free and clear retire at a much younger age than the people who don't. And it's by over a decade. So you want to be in a position to retire, to enjoy life, the golden years, be a grandpa or grandma. This is very, very important. And I'm telling you, they're brick by brick trying to take this option away from us. That's what's going on right now. So hopefully this is helpful for you. Share this video with your friends. Let's help make them smarter than everyone else. And I'll keep you guys posted with another update, hopefully tomorrow. If not, it'll be the next day. But if there's something important I think you should know, I will let you know. Have a great day, and I'll talk to you soon.